Hi, this is Greg. Welcome to the channel. On this video, I'm going to talk about one of my favorite subjects, and that subject is Exxon still a buy? And more important than that, what is the future of the oil and gas business, both in the near term and in the long term? So if that's of interest to you, stick around because it's coming your way. Hey, so subscribers of mine know that at the end of 2020, in October, I recommended Exxon Mobil when it was selling for around $33 a share. It's since had a crazy ride up. It's done quite well since then. At that time, I had a 10.4% dividend yield, which was absolutely amazing. And I've been very happy with the investment, and I'm sure that anyone who went in when I recommended it is just completely thrilled, not only with the dividend, but the fact that the stock has appreciated significantly since then. But the question really is, where do we go from here, not only with Exxon and Chevron, which are my two favorites in the sector, but also where do we go from here with these oil and gas companies, considering the fact that there is significant negative sentiment in the market toward oil and gas companies. Now, most of you, if you know me, you know that I'm a bit of a contrarian, and in fact, I believe that the only way you make money in a public market like the stock market, or in the bond market for that matter, is to be a contrarian. If you go along with the crowd like a bunch of sheep, you go along with the sheep, you become a sheeple, and you're never going to make money because you're just going to be doing everything that everybody else is doing. The way to make money in the market is to identify a particular belief that everyone has, otherwise known as a consensus, and to figure out a way to do the opposite and actually take a position, and then by the time everyone else realizes that you were right, you will have made a ton of money. So the negative sentiment in the market right now, of course, focuses around the belief that we're currently making this transition to greener energy or green energy, okay? While this is a very laudable goal, unfortunately, the reality of making such a transition is not as easy as it seems. There are many alternative energies that can be used today, wind, solar, among the most notable. These two technologies, as well as many others, are very far away from providing us with baseload capacity or enough energy to fuel the lifestyles that all of us have become accustomed to. As a result, it's my belief that the transition away from oil and gas is going to take much longer than most people, certainly the zealots and the Green New Dealers, certainly longer than they think it's going to, or realistically it even is possible that it could. So for that reason, I am still extremely bullish on energy, and there's another aspect to this that I want to go into right now. This issue is, where are we in the cycle of the market right now, okay? This bull market is very long in the tooth. We're at the critical part in the cycle where the Fed is beginning to realize how behind the curve they are in inflation, and they're going to have to start doing some pretty radical things to tame inflation, or else all of these politicians are going to get thrown out of office, and very quickly. Now, what happens when you get into this part of the cycle? Certain stocks and certain sectors of the market become extremely vulnerable, okay? These are, for example, the most obvious sector are these high growth companies, these startup companies. In many cases, they probably went public too early before they actually had a real business, and they make no money, they have no cash flow, all they have is debt. A lot of these EV car companies, for example, and it's going to be a very long time before they actually make any money. As a result, in an environment where the Fed is tapering and potentially raising interest rates, this sector of companies that basically make no money, largely in the tech sector, are going to get completely destroyed. So you got to ask yourself, where can I put my money so that I can hide, so to speak, and still have growth, still have the potential for increasing profits in the future and dividends in some cases, and not be subject to what could be a pretty nasty sell-off? When I look at that question, the obvious answer that comes back to me is energy, and more specifically, oil and gas. And anybody knows that has been watching this channel for any period of time knows that I love the integrated oil companies. Now, the two integrated oil companies that I love the most are Exxon Mobil and Chevron. Now, why do I love these companies? Even though it's a contrarian view, I love these companies because A, they have stable cash flow, B, they pay healthy dividends, and C is almost an unintended consequence, but it's a consequence of everyone bashing them and all these activists and all the climate crusaders hating on oil companies, and the government, specifically the Joe Biden administration, which has instituted a war on oil and gas companies. The ironic unintended consequence to all of that is that because they radically cut back their CapEx budgets, i.e. they're not exploring and drilling for oil the way they used to, because they've done all that and the price of the commodity has shot up so dramatically since the pandemic, they are literally printing money. And because they're printing money, they're incredible investments because, number one, they're very stable. Okay, when I see these stocks going up and down and up and down and up and down, you know, the technology stocks, the biotech stocks, whatever they may be, you know, Exxon might go up, it might go down, but it stays pretty steady because it's paying a huge dividend. Right now it's over 5%. When I bought it, it was 10.4%. I think based on my average cost, I'm making like an 8% return just on the dividend. And it's in a tax-free IRA. So I'm making that compounded rate of return because I'm reinvesting the dividends. It's all tax-free. Now look.
I'm no genius, but 8% compound return?
That is an insane return. And I have the possibility or the expectation that the stock's going to go up from here. And I've said many times on this channel, I think it's going to 100. Right now it's at 61. I think it's going to 100. All right, so with that as a prelude, let's take a look a little bit more carefully at the financial aspects of the company, and I'll go through some of the reasons why I think this is still a great investment. Okay, so here we are. Exxon Mobil closed today around 61.5, 61.6. And here we are. Let's take a look at the historical quote. So 3 years back, let's look at the 1 year chart. Okay. The 1 year chart, you can see it has bounced around. I'm not going to lie, it has bounced around. Let's go back to the 3 year chart. Here, just to reiterate, this is the tremendous sell-off during the pandemic. It did rise up, but then it came down. I recommended it like in here somewhere. And you can see it's significantly higher, basically doubled since I recommended it. Quick look at the key financial statistics down here at the valuation metrics. Price to sales, 1.11 times. Okay, now we look at a lot of stocks on this channel. And admittedly, the growth stocks. I just did a video on Airbnb. I think that was 21 times price to sales. Okay, that's a growth stock. But, I remember doing Snowflake. Snowflake was like, I don't know, 150 times sales. And it didn't even make any money. Okay, so this is insanely cheap. All right, price to book 1.66. Now this is price to the book value of the company, of the balance sheet. Okay, this is incredibly cheap. The price to cash flow 5.57. Now, by looking at this valuation, you can understand the incredible negative sentiment on this stock. And this is what I like to see. I like to see negative sentiment on a stock. You can see 5.59 dividend yield. That is still a very attractive yield for the risk that you're taking. A good measure of sentiment is to just take a look at these, what the analysts are saying. You can see the average price target is 71.80, which is about 16% above where it is now. You can see low estimate 50, mid around 71, and the high is approaching 100 up here. Generally you can see that the sentiment was in the basement right about when you should have been buying it, okay? And I think this is very instructive. Right around when you should have been buying it, all the analysts hated it. Now that they see that it's doing better, you can see that the sentiment has gradually risen. And although most people out there, including many large institutions, are negative on oil and gas, and they're all pushing this Green New Deal story, the point to emphasize here is that overall the market and many institutions are diversifying away from oil and gas, and I would say overall the sentiment is quite negative. Let's take a quick look at the technicals. Technically, it's a little bit oversold on the Bollinger Bands. Slow stochastics, it's not oversold. It's getting toward the lower side of its price range. It's just a little bit above, 60, 59, which would be at the lower end. Not a lot to look at here because the stock is not extremely volatile. And so, I would look at this stock, less from a technical standpoint, but more from the standpoint of, do you see the demand for oil and gas continuing? Do you see the dividend as being an attractive dividend? And is this something that you want to own as a very solid, less volatile component of your portfolio to maybe offset some of the more risky stocks that you currently own? Okay, so where does that leave us on Exxon? And let me also add that everything I'm saying for Exxon also the same holds true for Chevron. I'm going to come out with another Chevron video shortly. I'm going to dive into Chevron a little bit more carefully, but the only difference with Chevron has an equally strong balance sheet. They have equally strong prospects going forward. Both companies are pure oil and gas plays, and chemicals and the other things that they're involved with, but they are the least subject to going off into unprofitable areas of alternative energy, and for that reason, I really, really like them. They are, though, both involved in carbon capture, which I think is really cool. They're at the forefront of that technology, which basically takes carbon out of the atmosphere and uses the carbon for industrial purposes. I think that's a really cool idea, and that's one area where they're really trying to do things positive for the environment. They're also paying lip service to reducing their carbon footprint in the future. We'll see if that happens or not, but I wouldn't bet the farm on that. But the thing I like about them is they're pure oil and gas plays, extremely strong cash flow, killer dividend, and I also think that the supply-demand imbalance that you see in the market due to unintended consequences of bad government policy, I think these stocks are not only great investments, but they're good for anyone that wants stability in their portfolio and also a beautiful dividend which you can put into a tax advantage IRA and reinvest it in the DRIP program and get compound rates of returns on those dividends. And if you do this over a long period of time, this could provide you with a beautiful stream of cash coming into your account every single quarter. Alright, well, I hope you got some value out of this video. If you did, please subscribe and like and hit the bell so you get notified when I come out with other videos. This channel is intended to make you a better investor, to give you the tools to look at the market maybe a little bit deeper than most people do. I think I'm the only person on YouTube that is doing exactly what I'm doing here, which is delving a little bit more deeply into the market and also into these companies, and I hope you're getting value out of it. And so please subscribe, and I'll see you on the next video, which will be coming your way very soon.